It makes a lot of sense to diversify our capital into a bunch of stocks to mitigate the risk in equity investing. Here's why. If we invest in bunch of stocks, let's say some 7 or 8, we are better off to answer ourselves in our thought process when our mind asks, what if the company I invest in delists or shuts down? Basically, we choose the companies which are reasonably well known and are doing well since years, so the companies aren't going to attract all the problems in the world to itself just because we invested, or after we started investing in it. But this is generally how our pessimistic mind thinks. So try to be rational, and do your research before investing, and make sure the company you're invested in has a good operating past record and your money is most likely to do well in such company. Always choose optimism over pessimism when the company you invested is good, as no company wants to attract problems or risks to itself in the first place. Even though you invest in good companies, why not invest in multiple good companies, as there could be a probability that some good companies might do well than other good companies. So invest in bunch of companies and keep accumulating the shares of those companies whenever possible from time to time. Stay invested for years and let the compounding do its magic. This kind of diversification plus staying invested for long mitigates the risk of losing capital to a wide extent, and also could increase the chance of faster growth of wealth. So this is why diversification is important.